In this session, I think we need to get down to some of the subjects which actually were raised in the discussion, but have not yet really been appropriately dealt with. Education for business was mentioned. The whole question of how the business community needs and should have more practical support. What we have now at the final session are a number of luminaries who have a lot of direct experience, a lot of direct knowledge, and a lot of ideas to give in the context of improving how CSR happens and is put into practice in the real world, because it is actually at the end of the day about cultural change. So who are these luminaries that I refer to? We have, of course, Stefan, who will speak last in the group. We have Ernst Ligteringen, who is the CEO of Global Reporting Initiative. We have Jessica Fries, who is a director of IIRC, which has been mentioned in several occasions so far in the debate. And we have Rodney Irwin, who I think was actively involved in the previous session and asked a question and made some comments. Program director at the WBCSD, the World Business Council for Sustainable Development. So I will call, first of all, on Ernst to kick the ball off for this penultimate session.
Very much, and that was after a very lively session just before the coffee break, and I thought as we were going on, let me just take a few very short brief notes, and I jotted a bit down here on my iPad, but as the session progressed, the notes went tick, 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 tick. We should respond to this and this and this too. Nevertheless, let me try and be brief again. Is Europe ready to build the capacity of 18,000 plus companies, and these are all the companies of 500 and more employees, to have effective integrated performance and non-financial disclosure is the question. Let me start by saying that I think yes will be maybe my proposition, and I'll give you a few evidence points. First of all, many companies are already reporting. We're particularly pleased that after this session, GRI will be signing an MOU with CSR Europe about the collaboration, how we help to build capacity, how we help more companies to become familiar with sustainability issues and reporting. And that is also because many of the CSR Europe members are experienced practitioners already, and they have actually asked for it, and I'm particularly would like to recognize Marina Migliorata from Enel, who has been pushing and saying we need more collaboration in this area, not competing initiatives. That is how you come to real change. What's GRI's vision? Where do we come from? Our guiding point is that we need a sustainable economy. There are profound changes needed, and these are inevitable. How do you get to that? Well, come to just think of it. Billions of people around this world will have to change their behavior. Many will need and want, rightfully, a better living. Hundreds of thousands of companies will therefore have to adjust, because the economy isn't going to stay the way that it is now. And the big question is then, do you actually need to know more and different information about your business, about how stakeholders see it, your supply chain, about questions about your longer term future. And all of that is about positioning the company strategically and differently. And how can you do that without transparency, without actually getting the new kind of information? I think it was Einstein on some kind of luminaries. We are luminaries here, I hear. But there was a big luminary who said you don't solve a problem by getting more and doing more of the same. Now we know we need profound change, and that's what this is all about. The GRI's mission is very simple: to make sustainability reporting a standard practice. And we do this by a very important principle. We work in a multi-stakeholder way. That means we work closely with business, and we have worked actually with, I think now had contact with thousands of companies, but also with the information users and the transparency seekers of all kinds. And we work globally. Now, why this new directive on non-financial reporting and how ready is Europe? Many companies are reporting. If you look just at the current practice, the statistics have already been mentioned in the previous session. Among the very largest companies, this is virtually standard practice by now. Those who do not report are really now the exception. When you go then a bit further, if you look at Europe, there are thousands of companies, but there are 18,000 to go. All of these companies that are doing this, largely have decided on a voluntary basis. Not all, there are here and there policy exercises. They also decided to stay with it. And that's not because they're charities. They found value in it, and that is the value that many more have to discover. Now, at the same time, if we want to make the transition and also want to see this kind of information not to be only useful to individual companies, but to markets, and that markets get informed, then we need a wider availability of this kind of data. Because investment analysts, policymakers can make little sense of data that is available for some companies and not for others. And if we follow the completely voluntary path of, in the fullness of time, every company can decide on its own whether they will adopt this or not, then that is by virtue, or that is inevitably a very slow process. That is why we think that a bold but also a smart policy, as introduced here in Europe or proposed, is actually a very smart one. And in essence, it doesn't take away the voluntarism. It just addresses one very key point in voluntarism. Many companies seem to think that when it's voluntary, that it means I don't have to take a decision. That time is over. Sustainability issues are very important, and therefore a company does need to take a decision. And it can voluntarily decide whether to adopt this or not, but in the full sunlight, transparently, and individually state its position. That is what is absolutely important. And the experience from Denmark and elsewhere shows when companies have to decide, and they will take it into account, most of them decide to do that. It's also an important principle because deciding not to report, and I think it was Victor Kier who decided, in any case, whether you report or not, both positions imply a decision. When companies do not decide, then there is also a cost. A company leaves an externality. It withholds important information from markets. That imposes a cost on others too. And that is why the position here to actually ask for the information or an explanation why if you don't is a very important one. Let me just in closing address a few key points. Costs has been mentioned various times. I find the actual monetary estimates very curious. When the GRI just started, I heard an estimate and they said, what does it cost to do a sustainability report? And a leading person said that costs $1 million. Well, $1 million is larger than some companies' turnover. But $1 million for Shell or for BP or a very large company would be cheap. For others, it will be hugely expensive. So it depends very much on what company are you actually talking about. The cost is one thing. The cost of not doing it is another thing. You need to manage better. You need to know what your supply chains are about. Think Bangladesh. You need to know how you position with energy changes, resource overuse, demographic changes, and the list is very long and you can fill it in. Next key point, relevance. Sustainability reporting should not be a tick box exercise, not a competition in how do I talk about the most issue. The key point is materiality. This is about serious business, and that's why the G4 guidelines underline that principle enormously. A business needs to decide what is important to us in dialogue with its stakeholders and be clear about that and focus its report there. Then it is helpful for business, then it's helpful and meaningful for its stakeholders too. Should you disclose sensitive and confidential information too? The G4 gives very clear guidance on that. You can deal with that in a transparent way so that others know about this. For then my last point, and for transparency's sake, I'm also a director with Jessica. We sit on the board of the International Integrated Reporting Council. Many ask also the question, so does this critical information need to be and can it be integrated? The GRI's position in this is absolutely yes. We are proponents of integrated reporting. We recommend it. We are active participants in the International Integrated Reporting Council. We were one of the initiators there. And we do believe that in the end, to come to a complete picture, you do need to connect the dots, and that is to connect the sustainability information with financial. Is it therefore the case that you don't need to do sustainability reporting? Well, the answer lies in the word of integration. This is about integration, and you need to integrate information of substance. Our view is sustainability information is of absolute strategic importance, I would say, for every company, because of the changes that we are going through. So companies need to identify what sustainability information is material to them, and then seek how to integrate it. Now, that information that you integrate needs to be substantive, needs to be transparent, precise, clear. That is why you need a standard. That's what the G4 guidelines are designed for. The IIRC exists then to help and shape this concept of how do you integrate these different forms of information, how do you come to this concept of integrated thinking and make this together. So these are two fitting frameworks. They're part of an overall architecture, and the IIRC is in that sense driving an important innovation. Let me leave it at this.
All right, thank you, Jessica. I hope Ernst hasn't stolen too much of your script, but let's see what you've got to say for the IRC.
Yeah, so I think that's the perfect introduction, really, and to help clarify how does integrated reporting, and picking up on Ernst's point, I will focus on that question of integration and how ready companies are for integration. With the IRC, it was very much the first time that the international accounting standard setters and sustainability standard setters, as well as a lot of the other stakeholders involved in the corporate reporting arena on a global scale, really came together. And so I would just underline that integrated reporting really is about those, bringing together those different pillars of reporting, which I think historically, it's fair to say, both within most companies and certainly within the standard setting, grew up with reference maybe to one another, but really in quite separate silos. And so one of the key things that we've been doing is really recognizing, as Jesper and Michelle summarized very clearly earlier, that for companies it's no longer enough to really be looking at financial information separate from some of the broader environmental, social, governance drivers of performance. Business operates in a broader context. And what the integrated reporting framework is really doing is providing that overarching framework to ask those questions of how does the company's strategy, its governance, performance and prospects really link to the context within which it operates, and how is it going to be creating value not only now but also into the future. So a greater emphasis on future performance and prospects, not just a narrow perspective on the past. And I think key to that is also a focus on materiality and really concise reporting. Providing that kind of snapshot of performance with an ability to really drill down into more information for those stakeholders that really want to have it. So how does the work of the IRC really try and achieve that? As Richard Howard mentioned earlier, there's a consultation at the moment that provides that overarching framework. Novo Nordisk, Enel, Solvay, 95 plus companies have been really helping to test and develop that framework and provide input and recommendations through the IRC's pilot programme. Parallel to that is an investor pilot programme with 50 plus investors. So to respond to one of the questions raised earlier, investors are very much involved in this process, and certainly we see, and speaking to the investor community, really a growing demand and really, again, as with a lot of the corporate world, a sense that ESG issues are not something that can be left on the side. They have to be integrated. And I think you're seeing some quite rapid developments in that area. If you look at research by Deutsche Bank published last year, they did a meta-analysis of all of the evidence and the academic research to look at the links between ESG performance, environmental social governance performance, and financial performance. And I think the statistics there are fairly compelling. For example, they found out that 100% of the research that had been conducted looking at the cost of capital for companies, so their access to finance, was lower for those that performed better in terms of their non-financial performance. And the other statistics within the report are also fairly compelling, although they did highlight that actually when it comes to the fund management side, further progress to go. And I think projects like Delphi, which was again mentioned earlier today, are doing a lot of work to really help get beneath the surface and help the investment community to really embed into the analysis that they perform and flow that through then to the questions that get asked to companies. In terms of the level of integration at the moment, there's some research that was conducted last year which was really looking at, for large companies, 333 companies within Europe, within 6 European countries, and the main stock exchanges, and looking at the level of integration across the report. So rather than saying, is the non-financial information disclosed, asking questions like, if the company talks about the market trends and their strategy, is there a link between the discussion between those sections of the report? Is there a link between the discussion on strategy and the discussion on the sustainability drivers? So do you see those connections coming through in terms of the reporting? Does that flow through to the KPIs that get reported and the remuneration structures? And I think that that is where you see some very interesting disconnects in the majority of companies. You see some real leaders, but that is the area that the integrated reporting framework is really helping to address and provide a framework for companies to really think through and identify some of those gaps. Some of it, I think, is in terms of real work that is happening to integrate internally, and I think in the integrated reporting framework this gets termed integrated thinking, but really what's happening inside is as important then as the external reporting. But I think for some, companies haven't necessarily thought about the report and the linkage, so actually there's some quite quick wins for companies to take in terms of really reporting more effectively on how those different risks and opportunities link to the strategy, the decisions that are being taken. In terms of the statistics, for example, 85% of companies were reporting on future trends, but only 25% linking those trends to the discussion on their strategic choices. 94% talking about strategic priorities, but only 25% then using those themes to link to the rest of the report, and only 26% integrating sustainability into the strategy. Now this, just to underline, is the largest companies. So this is looking at that population which was highlighted earlier and by Ernst that are already quite a long way ahead in terms of sustainability reporting. 86% including KPIs, but 24% linking KPIs and remuneration. 36% linking KPIs to strategy. So some quite big gaps to address. But I think also some progress being made. And I would hope that by providing a better framework for some of the non-financial information and really providing that connect to the annual reporting, it does help companies to really move forward and ask some of those questions in terms of what is really material to our strategy, to our stakeholders, to our future performance, and report more effectively to investors and also to other stakeholders that are really interested in that future. I think the other thing to highlight is in terms of the internal management. So the integrated reporting pilot programme really has some early findings, and this is after the first year of the pilot programme, so very much initial feedback on whether or not integrated reporting does help with the internal management, which was the argument we heard earlier in terms of costs versus benefits, and the benefits far outweighing the costs. So again, of those pilot companies, 95% felt that it helped the board to focus more effectively on the right KPIs. So it really helped to elevate the discussion to board level and help the board ask the right questions. The companies felt that it provided a better view of strategy and business model, really asking the questions about the sustainability of the business model into the future. So 95% felt it helped to provide a clearer view of that business model. And I think another key one is really the internal integration. There's been quite a few times where I've been working with companies and introducing the CFO to the head of sustainability. And this was the first time that they'd really felt it was relevant to have a conversation. So really connecting teams, and again, 93% felt it helped to break down some of those silos. Not always easy, very different perspectives in some cases, but real wins from that better collaboration.
Could we
Yep.
come to a very quick conclusion here, Jessica,
point,
so that we can move off and get some participation from the audience?
So the final one, I think, is around internal processes, and this is the lead-in to, I think, some of the things, the work that WBCSD has been doing, which is around improved internal processes. So I think that a lot of the evidence that sustainability information hasn't traditionally had the level of investment and the robustness, if it's really material to the business and its performance, then a lot more rigour is needed in the quality of the information. And again, a question from the investment community there. So 93% felt that that integration drives improvements in the quality of the data.
Thank you. Rodney?
Good. I think it's still, no, it's good afternoon now. Until a few months ago, I was actually the finance director of a global multinational company. And in 2008, I was in the wrong place at the wrong time, which is what it felt like at the time when I was approached by our CFO and said, the supervisory board don't like our sustainability report and they've now made it my responsibility, so it's now your job. So in 2008, I started my love-hate relationship with CSR reporting. And I'll explain a little bit why I call it a love-hate relationship, because the two are actually very close to each other. I've been on the other side of the fence, so I'm sitting here as a representative of the World Business Council for Sustainable Development, a non-profit organisation, a membership-based organisation, but I share the pain of many of the people who have to do reporting because I've had to try and do it. And I think once you've experienced reporting from a practical perspective, it gives you a completely different perspective on what standard setters are doing, on what legislation should be about. And also, it helps you come to terms with schizophrenia, because in many ways, being a non-financial reporter and a financial accountant puts you in a collision crash with your own mind. I'm aware with the current state of corporate reporting as a practitioner, as I've said, and I'm very intrigued about what's going on. And let's face it, 2013 is a huge year for non-financial reporting. The GRI last week launched its G4 guidance. The IIRC have issued their draft consultative framework on the 16th of April, which coincided with the EU's reform document. And let us not forget that the Americans, in the form of the Sustainable Accounting Standards Board, are also actively working, and in 2013 have issued 2 quarters of sector-driven KPIs, which are now out either in exposure draft or have finished their consultation period. If I look at this really as the voice of business, what is WBCSD's position? And I think our position is very clear. Business reputation is at an all-time low. The financial crisis that has hit the world didn't happen because we had too much regulation or too much reporting. It happened because there wasn't enough mandatory disclosure and enough transparency within organisations. And also the complexity of many of our organisations were so bizarre that even the people managing them and those discharged with governance weren't able to control those organisations. You can sit on the board of a bank, but unless you really understand the assumptions that are embedded in derivatives, you're not going to really have a clue as to what's going on. And in many ways, this concept of too big to fail has also been a comfort for many large organisations because they know that somewhere somebody will help them. And that brings us back, I think, to those businesses that really want to be transparent and want to move forward. And what we see from our members is a call for can we just make this more simplistic? Can we have the organisations that are responsible or have elevated themselves to responsibility for standard setting to collaborate with each other, speak the same language, and produce documents or frameworks that allow organisations to move in a progressive way. So we're very encouraged that the GRI and the IIRC are in alignment, and that they believe that both frameworks can live side by side. And we're also confident that, having met with SASB in the US, that their perspectives are also aligned with the greater reporting standard setting debate that's ongoing. And when we look at what's happening here in Europe, the mandatory reporting discussion, I think, is a no-brainer. And I am a sort of a part-time academic, if you like, and I would like to refer you to the work of two academics, one based in London and one based in Harvard, who, they're Greek, and one of them is called Seraphim, the other one I'm going to attempt to pronounce. But they've issued research on mandatory corporate responsibility reporting, having looked at 58 countries. And they show that the adoption of mandatory CSR laws or regulations has resulted in business leaders showing more responsibility with respect to sustainable development. And then specifically, employee training has really improved as a result of the mandatory disclosures that these countries have. Moreover, for companies in countries with mandatory disclosure, corporate governance has improved. And on average, companies have implemented more ethical practices, that bribery and corruption has decreased, and that managerial credibility has increased. And these are all things that we at WBCSD want to see more of. So there is academic research out there that proves that when a country adopts mandatory disclosure, that it changes behaviour. And I think that's something that the CSR world needs to also recognise, is that companies are legal entities, that they do have a legal persona, and that they're managed by human beings who, in many ways, have to live within that regulatory framework. And what we are doing at WBCSD under the concept of financial capital is three pillars. One is being the voice of business towards the standard setters. So acting towards the IIRC or the GRI or the SASBs with a business perspective, so that these frameworks are fit for purpose when they're published, so that business doesn't have to pay for expensive consulting to actually implement them. The second pillar of our work is on changing the rules of the game, because we believe today that the standards don't necessarily go far enough. We are passionate about integrated reporting, and we want to see that companies are required to become obligated to do integrated reporting in the not-too-distant future. But we also believe that monetisation of externalities is something that really needs to get more debate and more transparency. We're also very interested in what's going on within companies with respect to risk management. As a qualified risk manager, I'm somewhat horrified by the number of people who are experts in risk management. Risk management isn't actually anything more than a good conversation. It is something that we as human beings are internally programmed to be. Every day we wake up, we exercise risk management. However, when it comes to a business, sometimes the overlaying of a framework on top of an instinct creates the opposite effect. So at WBCSD, we're actively working with COSO in the US to challenge the way in which companies perceive risk. Risk is a good thing. It is not always a bad thing. Upside risk is why we are in business in the first place, and it's the upside risk that allow business to bring solutions to sustainability issues. And we need to get clarification on what we mean by risk. It's not a bad thing. Disclosing your exposures is one thing, but also disclosing the opportunities that you're pursuing with a caveat as to the challenges you face in perceiving and getting them would mean that perhaps investors and other stakeholders will look at you with a fresh perspective. And the third area, and I think the one that answers this question of how can 18,000 plus companies effectively integrate performance and non-financial disclosure, does come down to education. The way in which most business people are educated today is suboptimal. I'm an accountant by profession, I'm a chartered accountant, and I think Jessica is also a chartered accountant. But the word sustainability was never something in our education. And it's still not there, really, for the people that are coming through today. It's an elective in most MBA courses. And so is business ethics, which is somewhat concerning considering the number of issues that we've had in that domain. But I believe education is extremely important. And that's why I'm really proud to say that WBCSD is collaborating with the University of Cambridge in developing a CFO training programme. This year we'll have the inaugural course on the 11th and 12th of June, and that's in association with also Accounting for Sustainability, which Jessica is an executive director of. So we are trying to show collaboration, but more importantly, innovation and bringing sustainability education to the finance world. Our Future Leaders team this year is focusing only on the finance profession, and we have 29 finance people from all over the world who are actually really progressive in the way they see company issues. So they're working on implementing internal control over financial reporting, which to our colleagues in Business Europe, I would like to just make a comment on that. See, internal control is not a cost to a business, it is a cost saving. If you are not implementing sound reporting controls, then you are inefficient and you are wasting money. Internal control is exactly what it says on the tin, internal, and should be driven by the organisation. And we at WBCSD are very much in favour of sustainability reporting being the responsibility of finance, for the simple reason that finance professionals have 10 to 15 years experience on average in terms of capturing data and consolidating it. My experience is that CR professionals or people in public affairs and spreadsheets are not a marriage made in heaven, and that it results in inefficiencies and information that is neither timely, accurate, consistent, or even presentable to the outside world without consultants. So businesses have the opportunity to take control of their reporting, give it to the people within their organisation that are already doing it for the financial world, and let the CSR people focus on strategy and corrective action when they have reliable, timely data that allows them to move forward. So, you know, business has a real role to play here, but the mandatory disclosures that the European Union will have, I think, is going in the right direction. For many of our companies and many of our members, it's not far enough, because we want some rules. We want to be able to understand how we are going to calculate these metrics so that they can be comparable. And if I could just have one more minute, that's what the investment community want. They don't want to read 300 pages of storytelling. They don't want to read about your case study in Nicaragua. They want to see a table of data that allows them, in a very quick instant, get an understanding of your performance, your priorities, and exactly where you're going with this. Otherwise, they will just bin your very expensive reports to the bowels of their archives.
Thank you very much indeed. A view from the warfront. Stefan, would you like to
Yes,
give us
if
your
you allow
final
me,
comments?
I will use slides for this one. I noticed with my colleagues, I still have paper and not an iPad, and I still use PowerPoint, so I'm very old-fashioned, I think. I should update. Good.
Who's taking charge of this?
I think maybe I have to do myself.
Well, okay.
That's what it's about. And we didn't prepare this like that, but the last words of Rodney about performance is also in my title. It's all about impact and performance. Mm-hmm. And I want to come back on how we look as a practitioners network to the proposal of the Commission and also to the topics raised here at the table earlier today. Because we think, I would like to talk about the opportunities of reporting, be it mandatory or not. What are the great opportunities of reporting in terms of better performance, creating more impact, enhancing trust, and it's about management in the end. And let me respond to an earlier question first, so that is out of the way. What is this kind of schizophrenic situation? I think the question was about Business Europe and CSR Europe, and you are representing the same type of companies. Yes and no, but mainly no. We are not. We are membership organizations, or CSR Europe is a membership organization from companies and from national partners in all European countries, basically, of a network of practitioners. They come to CSR Europe basically to get support or to work together and give each other even support on how to deal with sustainability issues, how to increase performance, how to enhance management system. That's what they come to do, and we engage in a policy dialogue. Has always been a strong part of CSR Europe, from the origin even, but engaging in the policy dialogue is not from a position point of view. It is from a practitioner's point of view. And what Jan showed earlier today is we bring CSR practitioners from companies, from different companies into the Commission or talking to policymakers and saying what are the real difficulties or what are the challenges or where does it go well or what are we afraid of, etc. And sometimes those companies are not aligned. What would you expect? Some companies take different stances on reporting and the way to deal with it. They take different stances in what should we have as a legal framework, yes or no. But that's what we are, a practitioners network. So in principle, Richard Howitt was very kind, but in a way, you will never see a position paper of CSR Europe. And let that be clear, which I think is a different role for Business Europe, who has to play a different role here in Brussels. But of course we react also, and there are some common denominators towards a proposal in the reaction. I think Ernst already pointed it out on materiality, the importance of materiality, and the importance of the comply or explain approach. To make it work, there is some required flexibility, and there is some required freedom in using different frameworks, etc. And there is, and that's the main message, and that's the content of what I want to say in this part, there is need for support, there is need for follow-up. It's not such an easy task. I've been a practitioner myself, and I recognize very well the love-hate story that Rodney gave on reporting and sustainability management and the attractions and difficulties of it. So that's about this schizophrenic thing that I wanted to add on that. And as I said earlier, this unique convergence in Europe, and indeed beyond Europe also with SASB in the US, 2013 is a good year for this, and it means a good year for companies to be able to improve further, because there is a lot of discussion ongoing, there is a lot of learning opportunities, I think, that GRI will be organizing from now onwards, is my understanding. We will see it happen that more companies will engage on it, that there will be a kind of better balance with, on the playing field and enough flexibility. So that is good. But how to make companies ready? That is our challenge as CSR Europe. And how to support to make sure that this reporting is about management and about performance. That is what we have to take this year, I think, and we have to work very hard on this. And I'm going to show some figures which actually align pretty well with the study you showed. And let me explain a little bit. This comes from learning networks with companies that we have, and this is a group of around 20 companies. And don't get shocked by the big gaps there are. I will explain a little bit. First of all, the first graph is a figure coming from the Commission saying how many are reporting and how many should report. So there is a quantitative increase required. On the other hand, when we look at, and we developed with CSR Europe a kind of assessment and benchmark tool on maturity and integration of CSR management. And maturity, I'm not going to give you all the technical details of it, but maturity meaning exactly, do you have KPIs, do you have targets related to it, do you have the management processes, are you reporting on it, etc. And integration meaning, do you talk to the other divisions basically, and how is that aligned in your management processes? And when you put the bar at 100% at a very high, and that you have to remind, we put the bar at a very high aspirational level, meaning you are mature and integrated in your operations, all your operations of your company, and towards your supply chain, which is almost, it's very, very high bar. We arrive at a common score, details, I'm not going to give, but a kind of average score for those 20 companies who were multinationals participating in this work and learning network at 46% maturity and 61% integration. What does that mean? Does that mean that only 46%, not even half? Or is the glass already half full and there's some room for improvement? But that's what we see. Companies, even bigger companies, still there is work to do. And in business operations themselves, it's better than in supply chain. So there is work to do. So there is on the quality, so behind the reporting, the quality of management and the approach, there is still some opportunity to progress. And I would like to give you a more difficult slide, but actually this is about maturity more in detail, and it reiterates what you just said. Basically, don't go into details, but on the top of this slide, it says that, yes, we have KPIs in place, even towards supply chain also a little bit. That's the 3 level, towards the 3 level. And in the bottom part, yes, we report. But the middle part is a little bit back. And that is about, yes, we have targets, yes, we link it to business management models, yes, it's linked to performance management. So here is this point of improvement that you were laying out, coming from a very practical work that we have been doing. So there is a lot of room for improvement, and given this convergence of initiatives, and given also, I think, the urgency, and I think the people from the NGOs and the labor unions pointed it out, well, it's time to deal with that in a more proactive way. We should take more action, we think, from CSR Europe, and we call it an integrated performance, but that's just a kind of to lay out that it's about the management, it's about the performance, and the reporting is a result. And if that link is not there, it becomes a little bit obsolete, and then the cost question comes up only. But the cost question should not come up in this management framework normally. So there is this kind of belief in this virtuous circle. And we think there are three things, and they are fairly straightforward. It's to be mature in challenges for companies, basically. Become more mature in triple bottom line management and reaching deeper into the supply chain as a challenge. The integration, and also Rodney and Jessica talked about it, and be then more transparent to enhance trust and dialogue. This is still, despite the years of, and also bigger companies having a long tradition, we are still on a learning path, and it will be continuous like that. So what we want to do with CSR Europe, and not alone with CSR Europe, but also with other partners, and let me jump one slide basically on that, is we would like to set up a kind of virtual, because it's not the institution that counts, but we would like to bring that together and make a kind of one-stop shop for companies on learning, on education, on exchanging best practices, on dealing with issues like how to set up our systems, how to enhance maturity and integration, and that's stream one. Stream two, and there we can build upon the work that indeed the Delphi project has been doing since the last, Mike, you were leading it since the last 3-4 years or more? 2 years? 2 years, I'm sorry. 2 years on how to make that link between the non-financial and the financial. And there is in the Delphi project you were talking about what are investors, asset managers, asset owners, etc. And companies, how can they be linked up? But also inside the company, this discussion between the CFO and the sustainability people. And we get a lot of our members coming in and saying, how can we make that business case? And now our CFO is asking, we have a great project, we want to do this or that, but we cannot prove the business case. So I think there is some work to be done in order to support practitioners there. That is stream 2.1. And then stream 3 is indeed about integrated reporting. IIRC is doing great work, and also with the pilot programs, we have then to work more together to see what does that mean practically in a company? How can we learn from each other how to do this integrated reporting, how to make those links? So we have this kind of idea, and also towards governments, to work together and to see if you want more reporting and you go towards more integrated reporting, what does that mean? And I have 1 minute, but I only need 1 left. So that's a kind of, for the moment, concept. Well, we started already a little bit on some elements of it, but we would like to shape that in a much stronger way than before. And we would, I'm not going to go, but it's basically creating learning networks and benchmarking opportunities for companies to learn. And that is the outset of it. And we would not like to do that alone. And that's why we reached out more than in the past, I think, as CSR Europe, in first place to GRI, the World Business Council, and IIRC, but also one of our members, our national partner in France, IIRC, Michel Doussin was talking earlier about, who have been doing work on reporting since many years now, like to involve them in one group of support organizations basically towards all our common members and all companies that want to report more, and then also support governments, because legislation is one thing, how to follow up and how to make sure, and I was talking earlier and I think Victor also referred to it, legislation is one thing, how to support companies to improve on it made the difference in Denmark. So I think at the European level also that difference has to be made, and I wanted to close on that one. Thank you.